Hey everyone. So I've had a request to slowly chart Tesla. Um, so I thought I might just use this as an opportunity to also talk about just stocks in general and how there are some differences and how you've sort of got to be a little bit more, um, well, a little bit less precise really on how you actually find your levels. Um, so say to start with Tesla, it's been around a really long time. It's been through a couple of different phases as far as long-term accumulation and then a markup and then sort of a wider ranging accumulation, which is sort of what it's going through now. And probably there will be another markup coming. So how I would start with something that's been around as long as this has is I would start on something like a 6-month basis. I would look to find first support and resistance trends. So I'd just be starting all the way back here years and years ago and just running between my first two distribution candles, seeing what has broken them. So I'd be taking it down to here, and then I'd be looking at my next interior trend, which was to here, and then I see this one's broken it. And then what I see when I look at this is I see a trend compression. So this is where my two trends have come really close together. It's swept the top liquidity, bounced off the bottom one, and gone into its first markup phase. So that says to me that this is accurate. This is where our trends are actually sitting. I'd then sort of have a bit of a quick look and say, hey, look, do we have any range trends? Yes, we did. We had this range trend down here, which was hard closed here and then retested, and that added to the fuel, which pushed that move. Do we have another range trend? Yep, we do. It's there. That's been completely obliterated, and obviously the price has just shot up from there. So everything down in here says, yep, okay, that all looks correct. That is our structure. That is where our trends were. That's how we got our compression. That's how we hard closed our range that we were in from here, and that's how we took off. So I'm happy with that. So now I'm going to look to see if I take my trend anchor from down here and I run it up to the next candle up. Have I lost that trend or broken that trend? And yep, we did at one point. We created a hold level on the downside here, and you notice there's big displacements between the monthly open, monthly close, these candles. Like if you were looking at a 24-hour market, this candle here would basically open exactly where this one closed. But when you start looking at stocks, you can see that you get these kind of weird displacements in candles of different sizes, and they don't open and close at the same point. But if I was to visually drag that candle down to that open, then there would be quite an engulfment, down the bottom here. So you've sort of got to look at them a little bit differently, as if you're moving the blocks around on the screen. But from what I can tell from this, we lost that trend at one point, so that takes us back to here. So this was our 6-month support trend, and we got that bounce off it, we got an engulfment, we got another push up from the engulfment, and then we had a retest of our trend. So that would have been your second sort of generational entry, and certainly a return to that trend at any point in the future would also be one of those entries that you'd be foolish not to buy it, because it is such a high time frame support trend. But yeah, as you can see, the price is now running away from it. And so we have another interior trend which runs up like this, and the price has spent quite a bit of time below this and around this, which means we can probably now start to array our timeframes and look for something on a more relevant scale, because not everyone is going to want to sit a buy order on this trend line and just move it every 6 months and wait to get their Tesla entry that may never come, because if we close up over top of this 6-month trend, we could bounce off that and shoot up into the sky. And that's why I did a very quick video just recently, but these are some of the things which show that this is ready for its next markup phase. So before we start adjusting our trends, let's just have a look at our horizontal levels. And so what we've got is we've got this level down here, which is a break level. Now if I was to take this blue candle and line it up with the body here because it's displaced, and if I took this yellow candle and lined it up with the body there, then this would be a hard closed break level that is going to close in 3 months time, based on that, even though it doesn't necessarily look like it because it looks like it's just under the line. It's not really under the line if you sort of lined all this stuff up. And our other level will be up here, so if we shifted that up and shifted that up, well, then it's closing over that level as well, and we've already closed over that level once, or so we thought. But if we took that candle and moved it back down to the body of this candle, no, we didn't. So this is kind of the stuff you got to look at when you look at stocks with their opens and closes and their displacements that they have in their price structure. Sometimes you might think you're above a level, you're not. Sometimes you think you're below, but you're actually above. It's all very, very inaccurate is probably the best way of putting it. But sometimes you also just get these really big moves that close really above or really below, and then it's really obvious. So that's our 6-month scale. So now if I wanted to mark some of these out, I could put this down here and just go 6-month break, because that's our 6-month break level. And this is also a 6-month break. So that's kind of our 6-month range, roughly $400 to the upside, which is why that's such a key area, and about $300 to the downside. That's our range. So now if we were to jump down and say look at the 1 month, what I want to do is I want to put an extra line on here. Take that. Just going to float it. Kind of magnet tool makes that really hard, but I'm just going to put it here, right? And I'll call this one our 6-month, and call this one our 1 month. Just before we go, let's put that trend on there, which is now moved to there. So that's our 6-month. Okay, so let's drop down to the 1 month. And so what we're looking for is, where is our 6-month anchor? So 6-month anchor is this dot here, based on the 6-month line. And so I want to just visually look ahead of that and say, do I have any candles that are fully open and closed below? And I have this one. So I'm going to take my 1 month and I'm going to put it over there, like that. Then I sort of have to look at these candles and go, well, is that above it? I think it is. And it would have been, because if I shift all these bodies around, that definitely would have been above that line. So I can take my 1 month trend to there. And then like we saw on the 6-month, there is our trend compression, where our two trends get quite close together. We sweep down below them, and then we start our bigger move up. So you're just looking for these same types of patterns and behavior. And I look at this one and I go, well, yep, that would be up there. So that would come down a little bit. I think that would still be above the trend and retested the old level. So this one's actually a range trend, and these candles both touched it down here. So I'm not going to run another trend off this candle, but I am going to run a range trend off that candle because of this one up here. So we've got another range trend in play there, which means our range is just building up and becoming more parabolic. And we've got a normal trend that's running through like that. Okay. So from a 1 month perspective, this is now looking like it's preparing to close back up over the top of the 6-month trend. It's closing back up over top of the 1 month trend, which is running up from here, and it's closing back up above the 1 month range trend, which is running through here. So this all looks really bullish, like really bullish. Great place for price to be. And I've also got this level in here, and this gets really tricky because you've got displacements and displacements and displacements and displacements. So they're just everywhere. So we're so close to that level, you would actually have to pretty much break out a calculator and work out these gaps to figure out, are we above it, are we below it? Because you can sort of roughly look and go, well, the distance between those two candles is kind of the same as the gap that's in there. So if we push this line up, because there's a gap there, push up, and a gap there, push up. If we lined all this stuff up, yes, we're probably above that break level. And also, therefore, above all the trends and above the break level, we close there, we bounce, we go. So that's looking pretty awesome. We've got a 6-month resistance trend up there, which also means we're probably going to have, in between the two of these, we're probably going to have some other kind of resistance trend. So we have to look back here and go, that was our previous high. That price came to here. It rejected off that trend and it went down to the lows. So we have got this hard close above it. If we lined all these candles up, that should still be above that. So we're going to move that up there. And that gives us kind of our 1-month resistance trend. So, and then visually what you do is you start to look at these lines and you see, well, there's quite a parallel nature between something like the trends down here and the trend up there, and that's often how you get a bit of confidence that trends are accurate, because there will tend to be a lot of parallel lines that run between support and resistance, which is how channels. A lot of people talk about channels when it comes to charting, and it's a bit of a sign that, okay, yeah, I think I've probably found the right trends, because there was several reasons. Number one, this swept the trend before a major fall, so that means that this is most likely the trend. We had this indecision and this sweep over here before the major fall, and so when we find that trend, we find it by going, well, this is our trend, this is closed above, trend moves to there. Does that still make sense as a trend? Well, yeah, it does, because there's the rejection. So there was the sweep, because the sweep would come before the rejection. Sweep, hard close, rejection, dump, sweep, underneath, rejection, hard close, retest hasn't happened yet. So this is where this is probably going to be the next sort of resistance trend, and this stuff that's down here and that sort of 400 level, that might offer some kind of resistance. But we've got 3 months to go on that 6-month candle, so it could push up here and have some little rejection off there. And if we recover this, then that becomes, that $500 level becomes sort of that next upside resistance on the 6-month. So now what I would do is I'd look, well, to be prepared for this token effectively going into price discovery, which is what you'd expect to see if it got up over these levels. What we need to do is we need to look to see if we've got any up-facing range trends. So you get these blocks of 4 candles like this, where you've got 1 up, 2 down, 1 up, but the 2 ups are in the same area of each other. So that becomes a range trend, and that gives you some kind of upper target that you could aim for. Then one of the slight differences with stocks is because these doji candles, which even on 24-hour markets, doji candles are hard to trust, because structure is all based on accumulation and distribution changes. And so when you've got a candle that in its very nature is not really true to itself, it could be accumulation, it's undecided, it's a real indecision candle. So when you get this kind of thing, you sort of think, okay, well, could that actually be a distribution? Maybe. So I'm gonna think, well, could that be a trend? Answer is, yeah, that could actually be a range trend, because we never really managed to hard close it to the top side. Then we rejected off it to the underside, and then we went down to the previous trend. So yeah, that actually looks like it could be a trend, and it's got parallel structure to the current range trend over here. So okay, we'll put that on the chart as well. So now we've got some pretty important levels. We've got this sort of 400 area, the 450 area, and psychologically that 450 area That's a great area because a lot of people either missed the top previously at 450 and then they watched the price come all the way down to 200. And I know guys who sold that top and they're happy as because they bought cheap, they sold up here. But a lot of people look at them, with envy and go, "Geez, I missed the top." And um, so there'll be people waiting to sell that 450 area when we get there, definitely. So that's all got a lot of confluence psychologically and structurally. And then, of course, 500s. It's a round number. People who say if it gets over 500, I'm going to sell. So you'd expect to see some kind of resistance come in at that 6-month level, and then after that, well, you start moving up into these higher range trends. So yeah, that's pretty much how I would slowly chart the high time frame on something like Tesla. And those differences between stocks and 24-hour markets are pretty much all to do with displacements and level accuracy. And you can have things bounce off levels and not even look like they've touched the level. But if you add and subtract all the little differences between the candles and their opens and closes, what you'll find out is that they did touch the level, and you just didn't have the level right, because it is really hard visually to chart a chart when you've got big gaps between the candles and you're trying to be greedy and get an entry. And realistically, there could well be an entry that you think you're going to get at 400, but in actual fact it's 402, and it bounces off 402 and disappears up into the sky, and you missed it. So yeah, stocks are a bit harder. But yeah, hopefully that gives you a bit of info on how I would slowly work out structure on something like a high time frame stock. And yeah, if you like it, like and subscribe. And if you got any other requests, send them through, and we'll get them done. Get them done on the quiet days. Cheers. Bye.